what we see is DePIN is generating revenue. So just on chain, we see 72 million in revenue generated in 2025. And for DePINs that don't report fully and have off-chain revenue, this number might be 120 or 150 million. So compared to 2021, we've probably over 100x revenue. A lot of DePINs are now supply constrained. So they're actually struggling more to deploy miners and infrastructure rather than finding buyers for it. And a lot of the problem is now, how do we incentivize the marginal miner to contribute to the network? A lot of DePINs are starting to be profitable. So like GeoNet, for example, and Helium are sometimes on the verge of being net deflationary or even are net deflationary. And there isn't actually inflation happening anymore.
What's up, everyone? Welcome back to Shoot the Shit Pod number 19. I'm your host, Matthew Nade. I'm joined here with Hayden, Sam, Corbin, and Dylan. Today is February 3rd, around 3 p.m., and we're going to talk about Dylan's State of DePIN report. Equity perps are taking off with Trade XYZ. We're going to take a look at the DATs. They're doing some interesting things over there. And then we're going to finish up talking about with some AI crypto, as a lot of AI meme coins are taking off, but then we're going to get into the real AI crypto stuff too at the end. And as always, finish up with what we're doing on chain, which could be interesting after the weekend we just had. But I'm going to kick it over to Dylan. You launched or released the State of DePIN last week. Give us the highlights and what the report was about.
All right. What's up, everyone? Gonna give brief overview of the State of DePIN. So, DePIN didn't have the best year. A lot of the top tokens are down 94 to 99% from all-time highs. And the question is DePIN dying? So, a lot of people on Twitter, rage baiting about is DePIN dead, or, saying that DePIN doesn't have, a viable future. And we use a lot of the State of DePIN to go into what's actually the true state of DePIN. Is it growing? Is revenue sustainable? Should the token prices be down? And where are we really at in early 2026? So if we look at 2021, DePIN was just getting started. It was pre-revenue, so less than $1 million in ARR. Very demand constrained. No one could find any buyers for a lot of the data or resources being produced. Completely unprofitable, so networks are fully funded by token rewards, very high inflation, and then no revenue, obviously. Very overvalued as a result, so market caps are often at 1,000x plus multiples, so, baking in a lot of high growth expectations, to say the least, and everything was really speculative. Today, what we see is DePIN is generating revenue. So just on chain, we see 72 million in revenue generated in 2025. And for DePINs that don't report fully and have off-chain revenue, this number might be 120 or 150 million. So compared to 2021, we've probably over 100x revenue. A lot of DePINs are now supply constrained. So they're actually struggling more to deploy miners and infrastructure rather than finding buyers for it. And a lot of the problem is now, how do we incentivize the marginal miner to contribute to the network? A lot of DePINs are starting to be profitable. So like GeoNet, for example, and Helium are sometimes on the verge of being net deflationary or even are net deflationary. And there isn't actually inflation happening anymore. And then DePINs are arguably undervalued now relative to their growth. So we see a lot of revenue or market cap to revenue multiples that are in the 10 to 25x range, which is not at all unreasonable for a high-tech growth company in tech, and even in the public markets, you might see this. So what we're seeing overall is really real revenue being generated and honestly just getting started. Multiple is compressing, which is actually creating a more attractive investment opportunity for fundamental-driven investors. And actual growth that's driven by real-world usage. So like, no offense to the rest of crypto, but most of it's still fueled by gambling and speculation, whether it's perps or other kinds of leverage. All this is actual real-world value that's tangible and sustainable and stable. So we'll skip this. What we make the argument for in the State of DePIN is that there's really just about 3 viable ways to scale DePIN globally and sustainably. So the first is this interesting new concept called InfraFi, which basically connects stablecoin holders and liquidity, which is now over 300 billion in market cap, to off-chain real-world infrastructure yield. So that could be financing GPU compute or AI capex. That could be financing energy and solar panels and other kinds of energy infrastructure. It could even be cellular and wireless tech, just like putting antennas down, putting a lot of mobile infrastructure. And the whole idea is just to pay yield to these stablecoin holders and make it very easy and seamless to get the yield and supply of capital off chain. So if we're in like a bear market or a neutral market and tokens aren't going up and miners aren't super hyper incentivized to deploy, InfraFi is a sustainable way to expand infrastructure within networks. The second viable path is CapEx light networks. So these are networks that don't require billions of dollars of CapEx to really scale, but millions. So think of GeoNet. They're an RTK correction network, and with just 15 to 20 million in total CapEx, they've basically covered most of the global north and developed world where most of the revenue opportunity is right now. So that only took 2-3 years. They're now growing their demand side. They're doing 8 million in revenue on an annualized basis, and that could grow to 20 plus million, 50 million in the next few years. So very efficient example of DePIN. I think other networks are viable in this area. We don't quite know which ones yet, but that's a viable path for certain DePIN networks. And the third path is just bull market timing. If tokens are ripping, everyone wants to deploy miner. This is really good for the network in terms of expanding it efficiently, but does cost more capital overall. And once token prices decline, then you have a problem where everyone's starting to dump their tokens and it causes a downward spiral. So you need to be very careful if your growth is purely based on a bull market.
Dylan, I cover Helium, right, for our quarterlies, and you see a lot of the metrics, like daily users are at 1.7 a day, doing 67 terabytes per day. Is there a way for them to move into those other two categories, or ways around this? Maybe, I know they had like 3 token models, and now they've consolidated into 1 token model and trying to get over that overhang of some, maybe not the best tokenomics at launch, but like obviously pivoting when they need to. And yeah, so are like the bull market timing path 3 tokens just completely dead forever? Or are there ways around that?
The way I see it is that Helium isn't really CapEx light. However, it can do targeted expansion in high value areas, mostly like very urban areas that are cities, and you could have a dense infrastructure network. So I think if you target the expansion in CapEx light areas where like it costs maybe $100 million to deploy in a mid-tier city to get 75% plus coverage. There, I think you can do the CapEx light model, and you can scale in any market condition. You have to be very strategic about where you're deploying and where you're focusing incentives. InfraFi is a maybe. I don't think Helium's considering it yet. I think there's a lot of still just underlying questions about credit financing and just how do you underwrite all of this. And I don't think it makes much strategic sense for Helium to focus on that at the moment. But we're seeing networks like Dawn, they're doing fixed wireless broadband that are pursuing InfraFi. So it is possible. And then bull markets, it's possible it never occurs again. Within crypto, that's unlikely. Maybe within DePIN, we never get a bull market again. But the way I see it is that you should as your base case, assume that you're doing very strategic deployments in high value areas that are CapEx light, so to speak, and then take advantage of a bull market when you can. So that can accelerate growth and accelerate the network's process, but you shouldn't build around that assumption. So I think Helium is like kind of in this CapEx light strategic deployment zone and can opportunistically use bull market timing. And InfraFi is also a potential option down the road, but I think other protocols will probably validate it first before they consider it. So I'll just speed through here so we can get to other topics. Overall DePIN, $10 billion market cap now. Like I said, generated 72 million in on-chain revenues. Big drop from last year, 50 billion to 10 billion, but revenues are going up. And payback months are actually pretty reasonable for miners still. And then in terms of capital raise, we're still seeing some pretty big deals. less on the pre-seed and seed side, but still some massive Series A and growth rounds. So, we saw some 100 million deals of Walrus, which is a file storage network. Daylight and Fuse are really exciting energy networks that are soon to launch tokens, hopefully. They both raised over 70 million. ICN's a compute network that's really exciting. Hive Mapper's been around for a while. They announced a 32 million raise. Double Zero is one of the big stories of the year. Kind of a decentralized internet for blockchain applications. Versions of private equity fund that buys businesses and uses DePIN and stablecoins and DeFi to make them more efficient, improve margins. And then Dawn is the fixed wireless DePIN I noted. So still seeing big rounds. Investors, some of the top tier investors like Standard Crypto, Framework, Pantera, Dragonfly, Polychain, Multicoin, they're all going all in on DePIN still. And yeah, I think one thing worth highlighting is also Grass has done really large revenue. So we had the chance to sign an NDA with Grass and verify some invoices and other documents they had, and we could verify that they're doing over 10 million per quarter with some of the large frontier AI labs. So, like I said, a lot of chain revenue is actually being generated by DePINs, but we just can't verify it all in real time. So, that's also DePIN's, secret weapon. So yeah, then I think we could talk a little bit more about InfraFi if you guys are interested, but we're seeing compute, energy, bandwidth being used. I think there's a lot of underwriting questions that are still being addressed, but USDAI is going to be launching a token over the next month or so, and if that does well and Daylight does well with DeFi, I could see this actually becoming a large narrative that's actually backed from fundamentals from day one.
Yeah, what are the timelines? Like, what should we be looking out for? You said USDAI is launching their token in about a month. When Daylight and Dawn could kind of prove that InfraFi is that next leg up for DePIN?
Yeah, it's a good question. I think it's really just going to be first with USD.ai, which is launching next month, and they could scale pretty fast. They've actually capped TVL just so that they can refine their underwriting process, but we're seeing major demand both on the demand side from neoclouds and other AI companies that want to finance their compute with credit. And then we're seeing tons of demand on the on-chain side where people want uncorrelated yields that are pretty high, 10 to 15% on these GPU loans. So, I think Daylight with DeFi, we haven't heard as much yet. I would imagine that there'll be a lot more news this quarter and then over the course of the year. So that could be very exciting. And then I think behind the scenes, a lot of DePINs are considering InfraFi just given the state of the markets. And, if it works for a few of these protocols, I could see everyone trying to get in. So this could actually really be, the next infrastructure narrative within crypto. And then one thing worth highlighting is also already USD.ai is dominating large shares of some of the largest crypto protocols in DeFi. So there's 17% of Pendle's TVL, which is first. And 3 times more liquidity than Athena. There's 77% of M0's TVL and also ranking first. So, this infrastructure stuff is actually what's might be driving a lot of these more crypto native protocols. And I don't think a lot of people are realizing that yet. So yeah, I guess we can kind of finish off just talking about the DePIN Leaders Index. So we think that these DePINs, among a few others, are really the leaders and what the success of DePIN in the next 2 to 3 years really hinges on. So all these protocols either meet the criteria of 500K in annual revenue, 500 mil plus FDV, or have raised 30 million plus in capital. And I think this is where the focus should really be for DePIN is there are tons of protocols and they all have potential, but this is the crux of is this going to work or not? And throughout the report, which you guys should all check out, we go deep into each of their business models. We do bull and bear cases for each of these DePIN leaders. And, I think you'll get a pretty good sense of where the industry's at and where there's been success and where there hasn't been. And yeah, and then, there's some frontier projects as well that we highlight. Definitely go check those out. I think that's where the DePIN alpha for what's up and coming is. But, most of these are still pretty early. So we're just waiting for them to build out a bit more.
Nice. Yeah. And definitely, Dylan also recorded a podcast, so definitely go check that out and definitely read his report. and covers everything a little bit more in depth. And yeah, I'm excited for some of this InfraFi stuff to come out this year. Hopefully be the next leg up for DePIN, obviously, as someone who writes the Helium Quarterly and is a fan of that sector. But kind of beholden to the rest of the market, which took a pretty big dump over the weekend. Even before that, and still, we were seeing equity perps really just take off tremendously over in Hyperliquid. You look over on Artemis, and Trade XYZ is like the fifth or sixth biggest perp dex by volume and open interest over the last couple of weeks now. And if you look just on Hyperliquid, all their markets, silver is the third currently in the last 24 hours, and gold is sixth, and XYZ 100, which is I think is their QQQ or the Nasdaq equivalent, and that is seventh. So obviously HIP3 is alive and well, and especially as the crypto token prices are not looking good, traders are looking elsewhere. But Sam, I'll kick it over to you first. What is this like? What is this showing? Obviously, Hyperliquid is outperforming right now as everything is tanking year to date. Bitcoin's down 15, Sol down 21, ETH down 28, but Hype up 35, and Pump actually up 17, surprisingly. And silver up 16%, gold up 13. So maybe Hype is uncorrelating from crypto and becoming more like a commodity. But yeah, what does this mean HIP3 wise and just for Hyperliquid itself?
I think there's a couple takeaways, most of which are positive. The first is that if you thought that trade XYZ volumes were just farming or wash, I think $3 billion in silver volume would prove you wrong. I don't know who could create that much wash volume that's on Hyperliquid right now, but it seems very correlated to the demand for silver in traditional markets. Hyperliquid ended up doing 2% of CME volume, which is the primary market for silver futures. So the asset was listed 30 days ago. I mean, I think that's a pretty incredible achievement, and yeah, it's cool to see. What I would say is that I take some of it with a grain of salt. I think like to extrapolate it to all of HIP3, which is permissionless perps listings on Hyperliquid, to extrapolate, it's a little tough. We haven't really seen a ton of demand beyond Trade XYZ listings. It seems like there may be some sort of special relationship between Trade XYZ and Hyperliquid. Maybe that translates to like better relationships with market makers or rebates, something going on in the background that we don't understand. But regardless, like Trade XYZ is far and away had the most demand out of any of the other HIP3 markets. Regardless, I don't think it matters how we get there. I think having RWAs take off on Hyperliquid is just like a fantastic development. I don't think we've ever seen this much demand for RWAs on chain. So the fact that it's coming through Hyperliquid and so soon after they've been listed is just cool to see. And then we got the HIP4 listing or the HIP4 announcement just yesterday or a couple days ago. But I think that'll be exciting. Some more like diversification in like the Hyperliquid product offering, adding binary outcome markets. So prediction markets, we could see that play out like sports betting, options. Yeah, I think it's a good path to go on. I think that like with all of like the leverage wipeouts we're seeing, like even though money continues to return to Hyperliquid, you have to wonder if at some point like the average leverage trader is just gonna die. I don't know how much longer they can like sustain this amount of it's like just carnage. I mean, it's like every other day there's like a $1 billion liquidation day, and I look at the Hyperliquid open interest chart, and it always pops back up. I don't know where they're getting the money, but regardless, I think that replacing that's like sort of price sensitivity to time sensitivity by trading options could be like something to watch in the future. So I'm happy that like HIP4 is being introduced now, like ahead of that curve. But I mean, like we're seeing this all play out in the price action too, right? Like a hype is like completely disconnected from the rest of the market, Bitcoin and alts. So whether that continues, we'll see. We might be headed to the gulags right now. Looking at the chart, it's not looking hot, but I think that there's a lot of demand for hype right now. I think there's a pretty big appetite. We've seen A lot of funds capitulate recently, like multi-coin buying something like 40 million hype. So yeah, maybe this time's different.
Yeah, Corbin, curious your thoughts there too, and also like we can pretend to be macro investors a little bit too, and like any reason for this big sell off over the weekend, and actually as we're talking, pump or hype just went up to 34.5 now. So yeah, in real time, people are showing which coins they like.
Yeah, it's pretty interesting. I definitely follow Sam's sentiment. Like, this is the first time I think in a while where crypto has been tanking and perp volumes have not. Like, perp volumes seem to have found a decent floor around December, and they've gone up from there. Overall open interest has gone down, but perp dex volume has continued to climb. And I think a big part of that is, well, obviously a big part of that is, silver and gold rallying. So I think it just shows that crypto's ability to source liquidity towards volatility, whether it's its own or in other assets, is super high quality and the best venue to do that. And I think that's super high signal. And they're doing that while crypto prices themselves are tanking. I think that shows like that hype can diversify itself away from the overall crypto market, which is super bullish for not only hype, but perps in general. To be honest, I'm not like super certain why we've tanked so bad. I mean, a lot of people are saying it's due to the Warsh, Trump announcing Warsh as the new Fed chair. And Warsh has been super hard on inflation. Like, that's his top priority. But it also, I think, just coincided with a really strong rallying and overextended rallying gold and silver. And so, but typically what happens is when the new Fed chair gets in, they claim they're going to be really tight on inflation and all this other stuff. They want to reduce the Fed. They say they want to reduce the imprint on the economy, the Fed's imprint on the economy. But usually when they get in there, politics takes over and stuff, and then we see them backward that. Like, if you read Alan Greenspan's book, biography, The Man Who Knew, he was like before he got into Fed chair, he was a super strong fan of Ayn Rand and had meetings with her like every week, and they were super strong libertarian values. Like, they wanted no Fed integration as much as possible. He literally got in there to basically, with the goal of reducing the Fed's role in the economy, but then ended up being one of the strongest in implementing Fed policy. So I think we're seeing like a pricing in of the inflation like rhetoric that Warsh has, but I think it's going to be walked back pretty quickly.
Yeah, it's going to be an interesting year, especially with midterms coming up later this year, and then a new Fed chair, and a lot of variability and volatility is can be a bad thing especially with crypto is the to the downside. Sam, were you about to say something?
Yeah, do you think this the downturn it's February 3rd at 3:30 p.m. EST, by the way, is the downturn that's happening right now a result of like government shutdown expectations, or what do you think? Because I kind of feel like we eat that up. That's like, it's not that concerning, I feel like.
I don't think so. Usually government shutdowns don't have that strong of an impact. The last one, people were starting to getting worried because it was so long, but overall the government shutdowns don't have a long term. Usually they're overblown in terms of market impact, I think, and liquidity.
What do you think about metals for the foreseeable future? Any thoughts?
I think they're going to be a really strong theme for 2026. I think they're going to continue to do well, but it's probably time to cool off for a bit.
No more 30% daily moves for silver.
Yeah, exactly.
That's crazy.
Like, that seemed pretty.
I mean, I know that like the supply on these or the monetizable supply on these metals is cornered, and so like they're actually not at high liquidity. But the fact that we're still seeing that big of a swing on what was it, like a $10 trillion asset or something, is just insanity.
Yeah, no, it's insane. Yeah, people always say, oh, the liquidity is thin, so this whole rally is just fake. And it's like, well, then why didn't it happen before?
And where else can they go to get that same amount of dopamine, right? They come to us. They come back to the coins. It's time to come home.
And
Talk about other people that are definitely feeling the pain. And Hayden released a report last week on DATs. They're doing something a little crazy, something we did not expect, you would say. I mean, a lot of them are definitely down on the year. I just pulled up some quick little five. MicroStrategy's down 15%, DFDV 15, Bitmine down 20. Oh, yeah, they're all down over 15%. But so they're doing something else to just, I guess, provide value to shareholders, and I guess ETHZilla is now tokenizing jet engines. Bitmine is hanging out with Mr. Beast, making some YouTube videos. One of them launched a meme coin, and so yeah, what's going over with the DATs, Hayden?
Yeah, those are some crazy headlines, especially with like the jet engines. I initially thought when I read that headline that ETHZilla had actually bought jets and was starting a chartering business. They're actually renting out, or they purchased jet engines that they're planning on tokenizing, is what it looks like, to generate yield for this tokenization strategy that they're going for. It honestly, in my opinion, it seems a little thin. They've sold a bunch of ETH, and I question the alignment with the original DAT strategy with acquiring ETH, and really I see it as more of a publicity stunt to try to get attention. And that's what I see Bitmine and DeFi Dev Corp doing as well. I think they're varying quality though. Like I think Bitmine investing $200 million into Beast Industries, you can at least put together a reason around that where Mr. Beast is a massive YouTuber, has massive social media reach, and aligning with that reach could potentially serve benefits to both of them, right? Especially with Mr. Beast branching into the financial side of the industry with Beast Financial. He's planning on releasing a financial YouTube channel and then application bank, essentially neobank maybe. So aligning with like a YouTuber of that reach seems like a good idea. Like I think investing in Mr. Beast is probably not a bad idea, but you're also straying from like the original direction of we want to accumulate ETH. Will this actually help them accumulate more ETH in the future? Maybe, but it's kind of thin again. DeFi Dev Corp, so they launched a meme coin, right? It's called Disclaimer Coin. Ticker symbol was don't buy this coin, right? I see this as just like the lowest quality marketing publicity stunt to try to drum up attention to get people to buy the stock, right? In my mind, that's like the lowest rung on the totem pole for publicity stunts that you can possibly do. It's like we've run out of ideas. Let's launch a meme coin. So yeah, really like the DAT bubble has popped, but these companies still exist, and they have to try to figure out a way to get investors excited about buying their stock again. And this is what they're doing to try to do that. SharpLink, I also dug into SharpLink there. They have a more responsible treasury strategy by deploying the ETH into staking and restaking. But anybody who's participated in any level of DeFi, it's a very simplistic strategy. Anybody could really do that. So I don't think it offers that much in terms of differentiation or excitement for when the market rewards speculation again. That's kind of my take on DATs and the moves that they've been making.
Yeah, definitely go check out his report too. And the crazy thing is if we get back into another bull market, I'm sure these things are going to get rewarded. And it's just the nature of how these things go. But I guess Corbin, I think you follow like MicroStrategy pretty well too. With where Bitcoin isn't Sailor about even now?
Yeah, the average price is about 75K, I think. So we're right there. And every time it goes down, you see people say like, oh, MSCR is about to get liquidated. Sailor's going to have to sell his Bitcoin. But there's technically no price point that Sailor has to sell his Bitcoin. So that's not really a worry. However, if common stockholders believe that strategy is going to have to sell common stock to service the preferred dividends, then it could get really ugly for the MSTR common stockholders, and there could be a run for the exits. I think it's low probability, but it is a possibility. And that in that scenario, Saylor might sell Bitcoin to defend the common stock.
Has he ever sold? Never,
Nope,
right?
he's never sold.
Yeah, that'd be a crazy. That might mark the bottom. Is when he officially has to capitulate a little bit. I know he definitely doesn't want to. Big hodler. But yeah, stats are crazy. Definitely go read Hayden's report over on Messari.io. But let's kick it over to the one of the few greens that have happened over the last couple of weeks is all these AI coin media. Everyone's becoming a dev with Claude Code. Moltbook was going off. BankerBot. Virtuals is kind of back, I guess. Pump is getting some green bars because of this, because people are launching pump coins. There's also the Bags app where people were linking these random tokens that were related to these projects that people were doing. And so, yeah, what are people's thoughts on the AI coins? Is Moltbook anything real, or anything's real? And then we're going to touch on like what the real part of AI crypto is in a sec. But what about these like AI related meme coins? Or I know BankerBot's a little bit real, but not too familiar with it. But yeah, what are you guys' thoughts over there?
I think Moltbook was an IQ test that we failed, and that's why we're getting this crash.
I deserved my losses on that. Maybe, I don't know. There's a part of me that, like, I saw a tweet. It was like Moltbook's a reverse Turing test. Does that mean I'm an AI agent
they're not
now?
real.
I don't know.
Yeah, they're just AI devs coming over. Someone creates a coin for them. Obviously, the trenches want a trench. There's not a lot going on, and a lot of developments over in the AI world. And then they were like link the token to the dev, and they can claim fees, and then they make a ton of money on fees, and they go, okay, I'm done with this thing. It's like the whole Andy meme from Toy Story. He's like, yep, done with crypto. The token price crashes, and then we're all back just creating the same coins again the next couple of days.
I think it's directionally correct for us to be building and like seeking investments in agent orchestration tools. And so like as much as I'm like, oh, maybe like Moltbook wasn't it, or like as far as like a product goes, maybe like it could have been built with like a little less spam optionality or like a little bit more post prompt. But at the end of the day, like I think that people should still be seeking like tools for agents to act more autonomously, act without prompts, to orchestrate with each other and communicate with each other, access tools, be able to pay for them. All of these things are definitely like the correct direction to head in. And so like maybe Moltbook wasn't it, but I do think it maybe like opened some people's eyes to like, oh, we're at a point where like things are starting to become investable. Like we've made a lot of progress from the AI agent slop meta of 2024.
Definitely.
Yeah.
Hayden, I was gonna tee you up because Ralph was cool. That was a fun, and like I used Claude Code to go and like web and scrape a website, which I thought was interesting. But Hayden, I know you're pretty interested in BitTensor. What's going on over there with like the real AI crypto?
Yeah. So Sam, you bring up a good point where these agents, you can see a future where these agents are going to need to access resources, right? And in my view, they're going to be able to access resources from BitTensor, which BitTensor has aggregated through incentives on each of these subnets, right? So an example of one subnet that is actually, we're starting to see this happen on is, sure, maybe the Molt bot isn't like real and Moltbook isn't real, but they actually, Synth, which is a synthetic data subnet on BitTensor, they incentivize miners to provide probabilistic price forecasts that can be used to build trading models. And they actually were able to trade on Polymarket with this data to run up $3,000 to $60,000 plus in about a month. So basically what they were doing were using these probabilistic forecasts to trade the 15-minute Bitcoin and Ethereum prediction markets on up or down, right? So you can imagine what an agent could do with this information, with this data that they're incentivizing on the network. Like the agent could trade autonomously with that data. which is cool. And they actually have had one trade and make profitable trades with their own data. The other thing that Synth is doing, which I think is very interesting, is they depend on the data, the quality of the data coming in to be like high quality, right? They've actually partnered with Crunch DAO, which is a DAO that has 11,000 machine learning engineers and 1,200 PhDs who are actually going to mine on BitTensor, right? So what does mining on BitTensor mean? That means they are going to provide their resources, provide their probabilistic forecasts to Synth in exchange for token emissions from that subnet, right? And this just increases the competition on that subnet to produce better and better outputs, right? Because the top outputs, which are graded, I believe in Synth's case, it's what's most accurate to what actually happens, get rewarded the most, right? So they're all competing against each other, makes the mining pool more competitive, makes the resource that they're producing higher quality, and you can monetize it then. And they're monetizing through selling access to their API right now. So you can actually go build a bot if you go access their API, which is, I think, is interesting, like providing this quant level data to anyone just by pointing incentives at it. So that's one of the subnets. Another one that's pretty interesting that's come out recently is Ridges. So they actually are a coding agent. So think of Claude Code, think of Cursor, right? They are incentivizing miners to build the best coding agent based on different benchmarks. So earlier this week, last week, they actually announced that they are partnering with Latent Holdings. So Latent Holdings is the number one open source code contributor to BitTensor. So they've also built Tau app, which is like the DEX screener for BitTensor. It's a beautiful looking app. Honestly, I wish DEX screener looked more like it. And they also have partnered with a couple of different subnets to help build out the incentive mechanisms and the products that those subnets are working with. So they're a top tier team. And I think this partnership helps Ridges get closer to actually bringing their product to market and it being successful. So I view it as a good thing. There was a little bit of hype into the announcement, traditional sell the news event, but I think if you actually look beyond like the sell off, it's increasing their probability to actually have a successful product. And that open beta is scheduled to go live February 19th. So that's something that I'd like to try out. They're going to offer it for a cheaper price than Claude Code. So might be something that you want to try out, compare, see for yourself, and just use. A couple other things that I thought were super interesting in BitTensor over the past couple of weeks. Templar, they trained a 72 billion parameter model over the internet, making it the largest model ever trained on decentralized infrastructure. And it actually got the attention of Anthropic co-founder. Good attention. He replied saying, "This is super interesting. Let me know more." And they're actually moving that model to post-training now. Yeah. And then Score. So you guys know what computer vision is?
Enlighten us.
Yeah. So computer vision is basically you have these cameras, or like let me take a step back. Think of a Tesla, right? How does it drive autonomously, right? It has cameras that are seeing everything around it and translating it to the computer and enabling the computer to see what's happening and interpret what's happening around it. That's computer vision, right? Now, Score, they're a computer vision company that actually started with partnerships with sports soccer teams or football teams to analyze the games and try to come up with forecasts for like sports betting, right? So they actually expanded that model to work with gas stations in Europe to monitor, like, are these people in areas they shouldn't be, stuff like that, just like monitoring through their cameras. They released a model that it's like a user-facing platform that users can create their own models to tell the computer cameras what to do or like what they're monitoring for, and so that they can like integrate that into their own hardware for counting customers, detecting authorized or unauthorized access into restricted areas, track incorrectly loaded or damaged pallets, stuff like that. So like real world use cases using computer vision. Yeah. So why does this interest me, like related to the token? So each of these subnets have their own alpha token, and they are incentivized by BitTensor based on the tau flowing into and out of their subnet. So the more tau that flows into that staking pool, more emissions that they receive relative to the other subnets. So they're actually incentivized to lock up that alpha that gets rewarded to the miners and the network so that they can get more tau emissions and attract more miners to incentivize better outputs.
Nice. Okay, so you mentioned Ridges, Score,
Yep.
Crunch DAO, Templar,
Yep.
and then what other ones should we be looking out for?
Synth, I think is pretty interesting too. Yeah. Also, 404 Gen is a text to 3D model platform designed for gaming. And I think they're going to continue down that direction. You can actually create these different model types that can be used in like Unity games, but they're also expanding to like the 3D asset types that are compatible with Roblox, right?
Ooh.
So I can see a situation where people actually take those assets and sell them on Roblox. Maybe they might be monetizing it themselves. I don't know. It's just an idea.
That's interesting. Okay, and then for obviously this is non-financial advice, but how do you get funds over to Tau? I've heard that was a tough thing. Enlighten our listeners and maybe me how we get funds over in the Tau ecosystem.
Yeah, so you need to purchase Tau, right? So you can go to a centralized exchange, like Coinbase offers it, Kraken offers it, and you set up a BitTensor wallet, right? It's I use Talisman. It's a wallet that is compatible. There's also Crucible, and I believe Tau app also has their own wallet. But
and you said Tau app was the deck screener, right? And that's the best way to go and go and search all the different subnet tokens.
Yeah, I like Tau app. There's also Tau stats, but I think the user interface for Tau app is very clean. You can have all the subnets. Do you want me to just share my screen here?
Yeah. Let's go into it. Let's look at it.
So
nice.
This is what Tau app looks like, and you can sort by price or the emissions that they're receiving. Shoots is up there at the top, and then you can like click into each of these and interact with the chart and everything, really. So obviously had a large sell-off. This is versus Tau, but I don't know. I kind of like things that are basing out personally.
Yeah. All right, I like it. And definitely go follow Xerox Booms on Twitter. He's been providing a ton of, that's how I'm keeping up with the Tau ecosystem, and I might have to go and explore it myself and follow along. And yeah, TLDR, the AI meme coins might have been able to show us what AI is doing. Meme coins maybe aren't related to the token or the actual project that much, and people are getting burned in the trenches per usual. But over in Tau, there's some real stuff kicking, and it's pretty exciting to see the AI crypto thesis really come together. And we're going to finish with what we're doing on chain. Hayden, I'll kick it over to you first because obviously I think Tau is what you're doing on chain. But anything else on Tau?
Mostly focused on BitTensor, just figuring out which subnets I think are actually producing usable, monetizable digital commodities that these agents will need to access to make them more powerful. Yeah, so really just playing around in BitTensor land. Yeah.
Nice. Corbin, what are we doing on chain?
Taking a little break because I got burned in the last little main run, but I'm getting ready. I have my bags deployed and I'll see. I'm ready for the next opportunity. I'm ready to get hurt again.
I love it. So. Sam,
I'm back on perps. I took
Like buying perps or selling or buying perp tokens or
Both. Why just one?
trading.
Uh,
Nice.
Levering up on hype.
levering up to buy hype on hype,
Nice.
and opportunistically other tokens as I see fit. But no, I had some perps positions open. I closed them. Would like to reopen another hype long, but maybe at a better price than it is today. And then I think the pump fund hackathon will create some like interesting opportunities. So I'm kind of paying attention to that. But I don't know. I kind of think maybe we get another leg down. So I'm not super keen to like allocate a bunch of the stables I'm sitting in right now. I'm kind of cool to just like sit and be a little passive. And yeah, if I'm invalidated, then I'd get in a little bit later. But I don't know. Nothing else super crazy going on. Kind of just same old.
Yep.
Sam, there's better liquidity to buy hype on Lighter.
Did you know that Lighter charges you a
If-
1% liquidation fee? That's so disrespectful.
I don't get liquidated.
Just gotta be better at trading.
Yeah. Imagine getting liquidated and they charge you a fee for it. That would ruin me. I can only deal with one. So but yeah, I mean, in all seriousness, like it's definitely cheaper to trade on Lighter, but I just think everybody should choose the one that they like or the one that they feel most comfortable with.
I was just messing around with you.
Yeah,
That's funny.
The hypo, we'll get the lip bull case next episode.
Yeah. Next episode, we'll do a DePIN or not DePIN, the Perp Dex Wars Part 7 or whatever we're on now. But yeah, I guess I'm messing around with FOMO. I think the FOMO's pretty awesome. Starting to consolidate my soul, like the ecosystem plays for hopefully, I think we're bottoming, hopefully not, or hopefully soon. With all this capitulation, kind of going to the good plays, Meta, obviously one. Looking at Arceum, I think that token launch could do well with privacy on Solana. They just released their mainnet alpha. Quick little self plug. There's just released a report today on it. So that's going to be pretty exciting. Umbra is now officially live, so that's exciting. I think the X article winner is announced pretty soon. Might be a little hint at what we're playing around with on FOMO. And but yeah, hopefully everybody can be a little bit more happy in a couple weeks or in a couple months as prices rebound. But as always, this was a great episode of Shoot the Shit Pod number 19. Hopefully get number 20 here in a couple weeks in your guys' inbox. As always, this is non-financial advice. Do your own research. You can do your own research at Messari.io. Read all of these guys' great reports, and we'll catch you soon in a couple weeks. Peace.
See ya.